This is Alan Bush with the Daily Financial Forecast for Tuesday, February 21st. Starting out with the stock index futures, we are seeing another new round of historical highs in the S&P, the Dow, and the NASDAQ. Strangely enough, though, we are seeing this strength even though the purchasing managers' indexes a bit earlier today, for the most part, came in weaker than expected. And in spite of that, we did see additional gains and some new historical highs, even with those negative numbers. So anytime a market ignores some bearish news, that has to be viewed as a sign of strength. So we continue to remain bullish on the indices. I think there is a lot left to the upside, price-wise and time-wise. Moving over to the currencies, the dollar index trading higher as prospects of a rate increase from the Fed later this year increase. However, some of the gains given back with the PMIs coming in a bit on the weak side. If we move another 50 to 100 points higher, I think this could prompt some negative comments from government officials as far as the dollar potentially being a bit too high. So I do think that the dollar index is likely to be range-bound over the next several months. I think there are better opportunities in other markets than in the currencies right now, especially in the interest rate markets, which we remain very bearish on, especially for the 30-year bonds. Those markets lower in the Treasuries as the probabilities of a rate increase move a bit higher at up to now 49% for the May meeting. So continue to trade bonds from the short side. I think there's a lot left to the downside in that market. Also, precious metals under some pressure today as flight to quality longs being liquidated in light of stock indices higher. But we did see a good bounce off of the lows with the PMIs coming in a bit on the weak side. My favorite trade, though, remains being long gold and silver. Also, I very much like the long side of stock indices once again. I would also like the short side of bonds. I think that is the place to be. However, I would avoid currencies for right now. So once again, long stock index, long gold and silver, short bonds. I think those are the markets that have the most potential. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.